Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So markets gapped up, then we start getting word that we're going to have no conclusion to the European sovereign debt crisis, and we sold off. It was a nice, cute little trade. Tech was, leading us lower. Amazon was still weak. There was a lot of situations for the cute cash flow trade to get short. Considering that yesterday we had our first down day, why not look for a little follow through? But then something happened mid-morning. Higher support held again. That 1220 to 1227 that everyone's been talking about weeks ago as the resistance, you know what resistance usually becomes? It becomes support. And we went as low as 1221, and that's where we bounced from. Now I know I would have loved to have seen the retracement level retested, that 1210 to 1212, because that's that 25% move down from the lows to the high, which has been the level that's been holding during this move, but it didn't even get there. So obviously you had to be long a little once we held that prior resistance, which turns into support, and then the rally just built all throughout the day with a lot of new little setups taking place and a lot of follow through to some old setups. So there's still a lot of things to do if you're cautiously optimistic, if you're looking through chart patterns, if you're looking for add-on plays, if you're looking for relative strength. Yes, you could still make money short. You could have made money short Amazon. We talked about that strategy. It bounced to 207, came off that. A lot of guys shorted versus that 207, that 15, 30-minute high. And then once it broke 202, which I know there was some support there too, that was your continuation short. And where did it go? The 200-day, around 197. So there are spots to be short. But really, if you're looking for a portfolio of things, there's been a lot more strength out there than just trying to be one of those stubborn bears. And I know being pessimistic is the cool way to be. Calling the end of the world, calling for catastrophic situations, is where misery loves company. Obviously, that's not paying the bills right now. And at this point, they're saying now November, so that means the forces of will could control the market till then. So if we don't go down tomorrow morning and the bears press us, and there's more news that people think it just is disgruntling or whatever the word is, you're going to see a bit more of a squeeze. So anyway, let's look at the chart of the SPX and take a look here. I went over it this morning with Stephanie, who is awesome. We broke through the low, came back up. Let's just fast forward. This was the last big area that held. Remember, this was the pause, and we rallied to that 1220 to 1228. This was the area everyone was talking about. Finally, on Friday, it took it out. So what usually happens after you take out a level? It comes in and retests it. So the low here is 1221. Okay, it didn't get to 1220, and it bounced. And if you would have just tried to nibble a little bit, it would close at 1242, 20 handles higher. A lot of guys were pressing here. Why would you press here on the first time going to test that? So obviously, if you draw in your Fibonacci retracement, we did not go down to retest that, that 25%, which is fine. Okay, that was your 1212. I was figuring that they wouldn't be able to hold it here, that they would shake it up a little bit because too many people were talking about it, but it did hold. So obviously, it might not be just off to the races, and we could still see this zone. That's why you shouldn't be sinking your teeth in yet, because we do need some more commitment. We need to show that this market will be bought in upper levels before you sink your teeth into it. But at this point, you don't have to sink your teeth into things. You just need trades. You need things to do. You need to hit some singles. Keep adding them up on the month. You guys are having a great month. A lot of you guys, which I congratulate, because you're not fighting the tape. As far as a stock that had some follow through today that I've talked about 3 times this week, just want to show you is Goldman Sachs. Goldman Sachs, it's been on the price point sheet many times. I've had this chart up so many times. Downtrend, broke to the upside, consolidated, and then 104, 75 was your follow-on add. And now it's on its way to 110. Looks pretty good. XLF also holding higher. This was the last breakout. Look what it did. Retested, turned higher, and it's still churning along. OAHs actually went above the recent high. So that's something to take notice, guys. There are small things that you have to take notice when you're trading relative strength, relative weakness, and you're looking to watch the price action. The OAH has just made a higher high of this move before the S&P. What does that tell you right now? Think, oh, relative strength. So that means some stocks in that group are probably acting better now. I know they were weaker a few months ago. I know they let us lower with the industrials, but things change. Rotation happens. New money goes into different areas on different quarters. So as far as the OAHs, looking a bit better. Stocks in that group are looking a bit better. I think we spoke about SLB today with Steph. Now I call her Steph like we're best friends. Anyway, here's a nice little tight range. Looks as if it breaks above this 70.50, it can get going and get some more follow through tomorrow. Honeywell, right? Not in this group, but I was looking at it today also. Nice little bull flag, right? Nice little consolidation higher. Looks to me as if it can continue above this 52 and hit perhaps 54. I spoke about GE today. Haven't talked about GE, I think, at all this year. Here is your red dog reversal, right? Right here. Nice, powerful move. Been slowly descending. So, and holding this prior breakout, it's worth a trade. People have a lot of money to put to work here, and if all of a sudden they're like, okay, high beta tech isn't acting so well, we're looking for dividend, looking for companies that already announced their earnings, so you can't get a curveball, maybe GE gets going. Tier 1, and once it gets going above 1650 or so, maybe you get momentum, and every now and then you can get a 1 to 3 day swing trade here, and that's the beauty of being an active trader. As far as, like I just said, high beta tech, not acting really well. If you look real quickly, I'll show you Amazon. I want to show you the intraday tactic real quick. Obviously crushed. If you see on the 5-minute chart, this was your intraday strategy. All right, this was your first little consolidation. It pulled in, it tried to get into the gap, could not. Look at this, it couldn't even fill the bottom third of this gap, let alone anything. So that just showed you weakness. So once it broke this to the downside, some people cheated a little bit, maybe shorting versus the high. And then I know it wasn't that easy, but it traded below 202 and really never got back above that besides this tail here, and then wound up closing near the lows of the day, and it just bounced off to 197. So as a active trade, this was a nice little short, right? You could have shorted versus the highs, versus that 30-minute high. I talk about 30-minute highs. This was your 30-minute high, so you shorted here against it. That's your stop. So maybe 205 with a stop at 207.50, and it reached the 200-day at 197. So 7-point risk versus 2.5 point, or 7.5 reward versus 2.5 point risk, and those are the type of parameters. But you have to be a really fast trader for that and a professional. So that's why my guys were doing it. I don't recommend that to people at home. Apple still living in this inside range. Not sure which way it's going to break. We've lost a lot of our other high beta friends. I think Apple's a little bit different than high beta. There's also value, so let's, who knows as far as which way it's going to go. I'm long a little. It did hold this prior area. It's trying to build a little base. It's still holding the 50-day. A little bit longer to the sideways, or a little bit longer of a consolidation. And I'd love to get a nice little trade above this 408, 409 for a squeeze into this gap. So we'll see. Doesn't mean it's going to happen. But the longer we get some consolidation, the more we'll know whether or not it's going to break to the downside or to the upside. It would be great for the market if it goes to the upside, but we'll have our plan in place and the market will confirm it when it happens. SINA was weak. That's what helped ignite the move lower in high beta land. We got a cute little short in BIDU, but if you stayed too long, you got hurt. BIDU still looks decent. It made a new low, came back above it. I tried shorting down here, got hurt a little bit. Still living below this downtrend, so we'll see what happens there. Google guys are really just pulling their hair out, if they have any hair. A lot of guys my age don't have hair, but I'm a healthy guy anyway. It did break below that 577, so guys thought it would fill the gap all the way down, but it didn't. It came below, came back above, trapped some shorts, got some longs out of the way, because it was prudent to put a stop here at this 577. If it did, it stole your stock down to 572. Then it closed back in the range. So maybe with more time, it could get going. I don't know what it's going to take for that. As far as what else went on today, let's take a look at gold. Gold and silver had some follow through. So if you're a momentum long who takes home stock overnight when things close in their highs, or commodities, you got paid today. Congratulations. Just another tactic that worked. Something to do. GLD, here you go. You had a nice, strong, potent day, and you got a little follow-through. Now it's probably going to need to go sideways a little bit. Silver, not a blockbuster follow-through trade, but it broke above this mini range down here. Guys that were quick yesterday jumped on it because it squeezed anybody trading against it, and a little bit of follow-through, and probably has some more room, but I don't expect it to go nuts to the upside, but some room there. As far as what else? I think JP Morgan, Wells Fargo, Citi, they all look the same. They didn't have quite the power of a Goldman Sachs today. Let's take a quick look at FCX. See what it did today? Look at that. Drew a little sideways action, and it's holding in there. Not pulling in. Be pretty good for the market if it starts getting above this area. I think Stephanie said she liked this one also. Let's take a look at this one. Cummins. Not bad. Still held the 50-day. Filled the gap. Looking decent. Could go sideways there or to the upside. So in the midst of all the headlines, and in the midst of everyone's pessimism, in the midst of people not wanting to look at the stock market, they'd rather go sit and occupy Wall Street, there's a lot of opportunity. A lot of opportunity for you guys that are learning the tactics on how to maneuver for the longer term, the midterm, the short term. It all depends on where you operate. And here we're trying to get different people in to talk about their time frames, so perhaps it would be better for you to focus on that if that's what you do. So you could do a lot. And even though we talked this morning also where she has a tier system also, but hers probably goes quarterly and yearly based on where the position is, and ours go probably 1 to 3 days or 1 to 3 weeks. So it's all relative. You could overlap it. Same way some people will do it just intraday with that type of tier system. So let's see what happens tonight. I'm sure there's going to be more volatility. I did take some longs because my thesis has been as long as we keep having these shallow pull-ins, I'm going to keep buying it. I'm not tier 2 or tier 3, but I'm staying involved. And this has been a great run for those who take an objective approach versus using their opinions because of the headlines and what they think is going on in the economy. We've been in this range now for 13 years. Perhaps it's all priced in. Who knows? One of my friends actually pointed this out. I'll show it. If you go back to the spiders, and besides it holding here, you go to the monthly. If we close up here in the next day or so, this is an outside month. An outside month is powerful. Not only did we have that outside day here that trapped all of these bears or got people out of the longs there, an outside month is even that much more powerful. And I guess you could see a low here, higher low, another higher low, and I guess it'll be time to get really excited on a macro basis if we were to ever get above here. But obviously there's a lot of trades between here and there. So just taking a little bit more of a macro approach, that's it. This could be even a little bit of a cup and handle, and this could be the descending handle. Let's see. I'm reaching. It's been a long day. Either way, a lot of things to do. Get short off the brain. Look for the right tactics and keep just booking trades and you'll make progress. And if you miss this move, the last thing you want to do is revenge it. The last thing you want to do is just keep getting short or just start buying up here because you feel like you missed a certain portion of it. It's not going to get you back to where you want to be, and it's probably going to put you in a deeper hole. Best thing to do, look at what went on, learn why you missed it, look at whether it's your share size, the amount of positions you have, your time frame that you were looking, or maybe you had some fights with your wife, your dog, or your friends. There are a lot of things that could create that fine line of making and losing. So figure out what it was in the past few weeks for you, or maybe you were just stubborn, and fix it, and then take small steps. You'll start thinking clearly, you'll start getting more positive, you'll feel better, and then you'll start getting some bigger trades. Scott Redler, T3 Live, the recap. See you tomorrow morning at the call or on the call with Jill. Have a good night.